Good afternoon, everyone, and welcome to our regular Monday Open, hosted by Vantage Markets Australia's private client group. You've just got me for today, and for the next couple of weeks, it's Jeff in Sydney. Mark and his wife welcomed a new baby girl over the weekend, and he will be away for the next couple of weeks. So congratulations, Mark. Well done to Mark's wife, who obviously did all of the work. And it'll just be me, as I said, for the next couple of weeks. So these are becoming quite regular for us. We do them every Monday. So in terms of an agenda, we're going to go through what happened last week in the markets, what we're looking at for this week in terms of possible big movers on the market. We'll go through some technical analysis and then do some Q&A at the end. So nice and simple. So last week, we had Australian CPI come in a little bit softer than expected. The market was expecting 2.6%. CPI came in at 2.5%. Markets were really quite happy with that. I think most of the professional traders were getting a little bit concerned that the inflation was going to be running away. It's come back a little bit, which is good. Ironically, that might mean that the RBA will have a little bit more space to cut rates, which would be good for those who are looking for that. We also on Thursday had US preliminary GDP come in exactly as expected. Again, at 2.3%, that's the preliminary number, and there weren't a lot of revisions to last month. So I would expect that the final GDP number is going to be very, very close to that, if not the same. We also had US initial claims come in a little bit stronger than expected. The market was looking for 220 on the new claims, and it came in at 242. 220's kind of been, I think some of the analysts at the banks were a little bit lazy with that one. 220 is kind of the average over the last 6 or 7 months for the initial claims number. For those of you who watched this last week, you might remember that I said it might be a little bit higher than expected, and that's exactly the way it came in. Over the weekend, and so kind of last week, this week, but over the weekend we had US President Trump announce or make a second announcement about the strategic crypto reserve. This is pretty much the only thing that markets have been looking at in Asia so far on Monday. Everything else has been pretty quiet. Trump had already announced the strategic crypto reserve, but what he did was give a little bit more detail. So he did say that it wasn't just going to be Bitcoin and Ethereum. The reserve would also include Ripple, Solana, and Cardano. So obviously this is not really my wheelhouse, and I'm learning just as much as everyone else is about this sort of stuff. There are some press reports that are like early press reports out of the States saying that this might be a way for Trump to get some of his friends out of positions that they can't get out of on exchange. But regardless, the US will be a buyer of those 5 crypto until they build their reserve. So for this week, obviously, crypto aside, because crypto is going to be a little bit of a focus based on the fact that the US has just announced themselves as a buyer. On Wednesday, we've got Australian GDP. The market is expecting it to be up 0.5. I think it's probably going to be a little bit stronger than that. I think we're due a good number on GDP. It's been a little bit soft the last couple of quarters. A stronger number than about 0.5 should support the Aussie. But again, lately, everything has been pretty much US dollar led. On Thursday, we've got the ECB interest rate decision. They flagged at the last meeting that there'll be another 25 basis point cut this meeting. So if they do anything other than that, it would be a major shock. I think what you'll find is that they'll do 25, and they'll probably give some sort of guidance that it might be time for a pause. I think the market is expecting maybe 75 more basis points worth of cuts from Europe over the course of this year. I think they do another 25 this week, probably skip a month, then do another 25, and then probably skip a month or two and do the last 25. That's tapering off. Then on Friday, we have the US non-farm payrolls number. Obviously, this is the biggest data release that occurs in financial markets, so it will be much awaited. The market is expecting a rise of payrolls of 156,000. That is a little bit softer than what it's been recently. I suspect it'll probably be a little bit firmer than that. A firmer number would probably be US dollar supportive for the time being, but would weigh on US equities because it might be the death knell of rate cuts in the States. I already personally think that we're done with cutting rates in the States, but there are still people in the market who think there may be some going forward. So that's the things for this week. I think, honestly, this week I think Bitcoin and crypto will be the big players, the big market of interests. I think the Aussie GDP will probably come in as expected. Eurozone ECB will do as expected, and then the market will kind of be a little bit thin and light this week ahead of that payrolls number. That payrolls number is always, as always, pretty important. So we've also got some technical analysis that we do on a regular basis. This one is the dollar yen daily chart. I had a look at it. I don't really like to do the share screens thing that Mark does. What I found was that 148.50 line that was prior resistance support on that last stab upwards and has now found support there again. I think that's a very important level for obvious reasons. I think it extends back as well. 148.50 was a prior intervention level, I think kind of middle of last year too. So that number is really a very, very important level. That trend line that's coming off the highs on the days is coming in on current day at about 152.5. We can see the MACD at the bottom as well. The MACD is giving a negative signal, but is losing momentum on the downside. I think what we're going to find over the course of this week, I mean, it's not saying much because it's a 400-point range, but I think market will probably just facilitate between 148.50 and 152.50. Any breaks of either of those levels would probably want to be either bought or sold into. I think this is kind of going to be a bit of a tipping point for dollar yen and for the dollar in particular. I think the next move outside of that 148.50 to 152.50 range will define pretty much the rest of the year. I'm a dollar bear kind of at the moment, so I think what will happen is that it will break to the downside. Price getting up towards that 152.50 level looks like a decent sell as far as I'm concerned, but maybe stops above that trend line, and then you just write it down. Even, I mean, if you were to get them away short at 152 even, with stops, 50 or 60 basis points above, targeting a retest of that 148.50, that's a good trade. You'd be pretty happy with that. You take 200 points out of a major currency at any stage of the game, it's a good result. The second one we're looking at is sterling, and I wanted to show this to everyone kind of more from an interest sake, just in terms of the way that I look at markets. I do like channels. This particular one is a parallel channel, so this is a feature that TradingView and MetaQuotes, MT4 and MT5 both have. Rather than trying to eyeball the second line, you can put them both on at the same time. What price has done that I think is really quite interesting is that it's touched that bottom trend line 4 times and it's respected it 4 times. That bottom trend line is currently coming in at 124.60. What it's done on the upside is it's touched it once to kind of hammer out where that line should be and then failed to touch it the next time. And with the MACD losing momentum to the upside as well, I think we're probably going to get a test to the base of that channel. I would be looking to probably buy a test to the base of that channel with stops below the prior low, which looks like they're about 123.50. That's probably what I'd be wanting to do. If that channel broke, sterling does tend to, when it moves in one direction for a while. I think this is kind of more a bear flag kind of pattern. I think eventually it does break to the downside. I'm not a big fan of sterling at the moment. Their economy is one of the worst in the world at the moment. So that's where I'm at with that. I think I'd want to be selling the upside for retests towards the bottom of the channel. And then eventually when it does break that channel, target that low and then further down. So that's it for technicals. Just while I'm at it as well, if you guys want to see something in particular that's a technical, please do feel free to reach out to us either via the phone, the email, or through the trading room. Request a chart. We can certainly go through something that you guys want us to look at rather than us finding what we're looking at, right? So, I mean, if there's something in particular that you want us to go through, feel free to let us know. We also do Q&As every week. These are generally questions that Mark or I have heard from our clients over the course of the week. We wanted to extend to a broader audience. This one is a little bit different, is that this week I made up the questions because I thought they were topical. Um, Question 1, what is a strategic reserve? So governments hold currency. They need to hold currency for trade reasons, and they also hold them for investment, really, more than anything else. So whenever you see that a country is intervening in its currency, that's where that money comes from. It comes from the strategic reserve. Obviously, as much as people say that currencies just print money, it isn't really that easy. So they do need to hold currencies. Generally speaking, the strategic reserves for most countries are their major trading partners. Excuse me. So what you would see generally globally is that the most held strategic currency is the US dollar, just because it's the most liquid and the biggest. Then you would see it break down to euro, sterling, and the yen, just because, again, they're the most flexible. They're the most volume-based currency trading. And then you would see that the next lot down would be the trading partners. So for us, our major trading partners are China and Indonesia. So I would expect that if I went through the RBA's balance sheet, which I have done before but haven't done for some time, I think you would find that we would be holding some Chinese yuan and some Indonesian rupiah. So to add crypto to the strategic reserves that Trump has suggested that he's going to do this week, he would have to sell down something else. That's something that the market hasn't really attached itself to yet. So, I mean, again, money doesn't just emerge. So he's going to have to buy that crypto with either dollars that they're holding or with euro or yen or something else. So it will be interesting to see how that plays out over the course of time. We are obviously talking about hundreds of millions or tens of billions of dollars. So, I mean, this sort of announcement is actually going to have a very big impact on currency markets, probably over the next 3 to 6 months. There will be press announcements when there are changes to that strategic reserve, simply because they have to. They need to have full disclosure. So when the US is picking up Bitcoin or Ethereum or the others, they will be telling us. And then when the Fed reports its holdings, we'll see the Fed holdings, and we'll also see what's been sold down. It will actually be really obvious because one of the currencies is going to get caned. The other one that I saw this week was there was some, or over the weekend, there was some noise about Trump wanting to pull out of NATO. So I did a little bit of research on that. Apparently, within the US Constitution, a president can move into treaties, but there is no constitutional precedent for him to move out of a treaty, which I think is really quite interesting. So for him to move out of the treaty, he can't just make that as a executive order by himself. He would need 2/3 of Congress to support that, which wouldn't happen. He could contest it in the courts. Generally speaking, the courts don't like to get involved in this sort of stuff in the US, and neither should they. So I think what you'll find is that he could talk about this as much as he likes, but it's not going to happen. If it did happen, the US would lose its ability to store military paraphernalia in Europe, Africa, and throughout many parts of Southeast Asia. So when you see that US aircraft carriers or US tanks and aircraft are actually sitting in some random country, that is through the NATO treaty. I don't think the US would be interested in losing its ability to be able to have troops around the world. The other one is that they would lose pretty much all of their customers for their arms. So they wouldn't be able to sell guns to the UK anymore. The UK, France, Israel apparently are actually becoming really quite big in that space as well. So they're becoming big in the weapons space. So there is a little bit of pressure on US companies as it is. But if they were not a part of NATO, they would not be able to do that. So that's it for us today. While I've got you, we do always like to talk a little bit about the other content that we have. Please, if you haven't logged into our VIP trading room, feel free to do that. I'm logged into that all day long while I'm at my desk. If you want to ask me a question, you can feel free to shoot me a note through there. You can share a chart through there as well. We also have some analysts from the Everest Fortune Group that are logged in there as well. They provide a little bit of analysis. I can see that Catan was actually writing some stuff while I was talking today now. They can answer questions as well if you don't like my voice, which is fine. We also have the weekly technical video that we upload to that trading room every Monday morning. And we have our private client daily update, which is an email that I'm going to be writing while Mark's away. Our team does that. It goes out every morning. If you want to be added to that mailing list, please do reach out to us in any of the ways that you can, email, phone, or through the trading room, and we can add you to that list. Once this webinar is finished, it will be uploaded to our YouTube channel and to that VIP trading room. So again, if you haven't looked at the trading room, please do. Thank you very much, and I'll see you next week.